Hi guys, today I'm here with Fernando, and we're gonna talk about why Florida, Georgia, North Carolina, and California are the perfect portfolio for real estate investment. So, hi Fernando,
How
I'm
you
gonna ask
doing?
you. Hi,
Hi, how you doing? Thank you. Excited to be here.
thank you. So, I'm gonna ask you some few questions, and you will give us a lot of information.
I will try.
So,
I will try. I'll try to do my best.
okay. So, how does population growth in Florida, Georgia, North Carolina, and California drive demand for premium rental properties?
Well, I mean, there's one state that I'm going to take out of there, which is California. California doesn't have population growth, but California does have a still very strong STR market. But as it relates to North Carolina, Georgia, Florida, population growth is insane, especially because we have a lot of migration coming from states like California, New York, Chicago, just not states, but cities like New York, Chicago, and some cities in California. So Florida has been experiencing a boom since the pandemic. So has Georgia, and so has North Carolina. So that's one of the reasons why I believe those are great areas for the STR market.
Mm-hmm. Okay, thanks. And what's the direct cash flow impact of Florida's zero income tax uh, versus California's tax structure?
Well, I mean, this is a subject, touchy subject for a lot of people, but I'm a capitalist at heart. I don't believe that we should be paying excessive amount of taxes. Um, and without going a lot into reasoning behind it, but it's like anything else, right? When you reduce your expenses, your profits and your ability to invest, your ability to grow, to
Mhm.
hire, etc., are greater when you're not giving away your money, right? And or when you don't have excessive expenses. Um,
Yes.
so that's why I think Florida is huge because Florida does not have an income tax. Now Georgia does, right? Georgia does, but the difference between
Uh-huh.
Georgia and Florida will be in terms of property taxes, right? The property taxes in Georgia are much less than the property taxes in certain parts of Florida, uh,
Mhm.
particularly Central Florida South. We have seen a huge increase in property value, which increases property taxes, right? Georgia, we're not seeing those growth as big as they are in South Florida. So property taxes are still low. In addition to that, insurance in Florida is super high, which also cuts into profits. Uh, and in Georgia, North Carolina, you don't have those crazy insurance rates either.
Yes.
Um,
Where the location are in a big risk, there it's a lot of amount of the insurance.
that's
It's
correct. That's correct.
yes. Okay. How does diversifying across four states protect against local market risks?
I mean, for me, diversification in every aspect of of business and in finance is critical, right? Um,
Mhm.
so, how do you get protected if something happens in South Florida and you have assets in Georgia, North Carolina, for just to name two other states? Then you're protected. So, I'll give you an example. During COVID, right?
Uh-huh.
Which is when I exploded as a business. The reason we exploded is because the world was shut down, but Florida was open. So
Yes. Everyone
had
came to Florida.
right, had I had all my eggs in one state like New York,
That's what I Yeah,
Yeah,
that's what I wanted to say. Like you don't need to put all your eggs in the same basket.
correct, correct.
Yes. Mm-hmm. Okay. How do business hubs and Ventura and Research Triangle boost premium rental occupancy?
How does it boost? I mean, it's, there's a lot of. It's tough to really quantify because it's in theory, right? But it depending on what your niche is or your avatar is, that's where it's going to depend as to whether or not you're going to see a boom. So it really greatly depends on the property that you have and that property's avatar.
How does local expertise across these states enable efficient remote property management?
Yeah, so that's critical, right? When you know the market, or let me rephrase that. The better you know your market, the more
Okay.
efficient and the more you can extract from that market, right? So, give you a couple of examples of what I'm referring to there. Uh,
Mm-hmm.
for example, Fort Lauderdale, right? If you
Okay.
know that market well, meaning if you know what's attractive in that market, then you could advertise that better than someone who doesn't know the market. In addition to that, if you know what the current demand is for labor, you can negotiate your vendors better than if you didn't
Yeah.
know, right? So those are just two very key points that'll help you greatly by being an expert in your particular market.
So you're saying like the expertise in Fort Lauderdale, it's not the same with other locations.
No, every market's different, and it's the short-term rental industry is very regional based, or it's what works in Fort Lauderdale doesn't
Yeah.
work in California. What works in
Uh-huh.
California doesn't work in North Carolina, right? So
Uh-huh.
it's very regional based. So the better you know your specific market, the better you can market that, right?
Yeah. Yes. So, how can we capture specialized demand from film and biotech professionals needing extended days?
So, I mean, it just again that's going to greatly depend on the type of property and what you're trying to shoot for in your specific market, right? So for example, if you have a property near a major hospital like John Hopkins, just to give you a great example, then
Okay.
if I had a property there, I would market specifically to nurses, doctors, and patients that need to go to John Hopkins, right? So that's just one
Uh-huh.
example of the importance of that.
Okay. So, where's the better investment? California appreciation or Southeast cash flow?
Okay, so if I understand your question, what, what do I think it's better, appreciation or cash flow? And
Yes.
the answer is both, right? You need a property that cash flows so you can pay your expenses, and then to build wealth, you need appreciation. So there's two very important things there. And ideally, you want both because you want cash flow, to pay your bills, to pay your expenses. But if you want to build wealth, you need appreciation. So if your property is dropping in appreciation, even though it's cash flowing, then it's not really an ideal investment. So you need both.
Mhm. Okay. So it's not, there's no one better than the other.
No,
You need
if
both.
I
Yes.
were so, for example, if one is going to be more of a gamble than the other. But when I'm looking to invest in a property, I'm
Mm-hmm.
looking for a area in which I believe, based on data, that, and I'm making an educated guess, that area is going to appreciate, right? And and let me preface that by saying the following: in real estate, it's a long-term investment, right? So
Yes.
I don't care where you buy your real estate. If you have time, and you should, if you're going to invest in real estate, then it really doesn't matter where you buy, because the history tells us that in 10, 15, 20
It's
years down
gonna
the
be
road,
higher.
it's going to, yeah, it's your real estate investment's going to be high. Now, how high really depends on how you bought and the market itself. But at the end of the day, you can't, I would not invest in a property thinking that it's going to appreciate and I want to sell it in a year. That's a huge gamble, so I wouldn't do that.
Uh-huh. So you like thinking about the few years from now, not
I'm
1
thinking
year.
10 years from now. I'm not
Yeah.
thinking 1 or 2. I'm thinking 10, right? 10 or more, because that's
The
what's
long.
yeah. At the end of the
Okay.
day, that's what's going to protect you. So I'll give you an example. When I first started investing back in the early, my early years, it was very slow. But when I started to pick things up was in the early 2000s. But then what happened in 2007, right? 2007, we saw the crash. So all those properties that I invested in early on still did well. But the ones that I invested in 2005, 2006, they didn't do well the first couple of years because 2007 happened. But holding on to them when 2010, 11, 12 came, they all rebounded and then some. So that's why time is hugely important.
So you waited.
Wait, right?
Yeah.
It's funny because
It's risky because you see it's not going high, so maybe you need to sell it quick and get rid of it. But you
that's what people
stay and
think, right?
yes,
That's what a lot of people did in 2007. They all lost, and if all they had to do was just hold on to it for
yes.
another couple of years, and then
Uh-huh.
it would have rebounded and did well, right? But the problem is people panic, and more importantly,
Yes.
like I mentioned, a lot of people think that real estate investing is short term. It is not. It is a very long term investment.
Okay, so how do local universities help recruit specialized hospitality talent? You talked about that before.
Yeah, and I mean, I'm not of the belief that you're going to find talent in a university. I don't believe that. Right? Can you find talent in a university? Yeah, you could, but I can tell you that majority of people that are working today are not working in the field that they went to school for. They're working in something completely different, right? So
Yes.
so for me, it's going to be more of trial and error, right? Because you're never going to know what you get. I'm one of those people that believes hire slow, but fire fast, right? If it ain't working, don't try to don't try to fit a square in a circle in a square hole, right? Because it's not going to
Okay.
fit. It's not going to work. So make sure that you take your time when you're going to hire, and then once you hire that person, set specific goals and performance markers. And if they're not meeting those, then don't hesitate to fire and get someone else. It's a lot easier said than done because hiring is one of the most difficult components of any business. But it's something that really takes a special skill to be able to identify talent, and talent could come from anywhere, not just the universities.
So you need to take time and don't be rushed.
Right.
Yeah. How does sustainable construction in these states become a competitive advantage?
I don't think it's a competitive advantage. I think the opposite.
Really?
I, I think that most people should. Let me backtrack a little bit. Here's the problem, right?
Okay.
And I'm gonna get on again. I'm gonna get on my soapbox here because I think it's a huge problem. Right today, the biggest reason why we don't see construction happen on a regular basis is because of regulation, and sustainability is being hampers construction today, right? A single family home should not be worried about putting solar panels on their home, right? Um, and trying to be as efficient as possible. That's number one. And again, I know some people are going to say are going to greatly disagree with what I'm about to say, but adding cost to construction is the problem of why affordability in housing today is a big issue, right? Back in my younger days, it was easy for me to buy a property, right? And it was easy to build, and people were building very quickly. What
Yes.
happened though? Government got involved, government wants to regulate
Regulation.
everything, and then now we have the climate people want to make everything sustainable when in reality it doesn't work, right? If you look at the airline industry is going bankrupt because they're trying to make their planes carbon emissions less, right? It's a huge problem in many industries, and it's why we're paying a lot more today for flights, for construction, for just about everything, because for whatever reason, we think we're going to save the planet by doing listen, the biggest polluters in the world are not abiding by any climate law. So until we fix that part, there's no way we can fix anything else. So it's just a big problem that adds to cost, and it's why it's so expensive to build today. And that's why we're not seeing people building single family homes. They're building commercial buildings because that's where the money is, but not in single family homes. Ask any contractor today and they'll tell you it's not profitable to build a single family home today.
Okay. Nice to know that. How do Florida and California locations attract international investors and high net worth tenants?
The land, right? People say location. In real estate, there's the saying location. It's important, right?
Yes.
Florida and California, in my opinion, are very, very similar, right? In terms of what they offer. A little bit different in weather, but in terms of beaches and
the taxes also.
Right. So that's very attractive for a lot of people. And that's why, as an investor, a lot of people come here and invest in. But I will argue that in the short-term rental industry, investing in California and Florida today, out in residential markets, it's not the play. The play today is not going to be buying single-family homes to turn them into short-term rentals. You can do it, you can make money, but the play, if you're looking to really cash flow, the play is going to be in unique experiences and unique stays. Hence why I'm investing in like my vineyard, where we're creating unique stays that you're not going to find in a major city. So that's where I think you should be invested in today for short-term rentals, unless you have a lot of money and you can start buying, these boutique hotels, large or not large, but mid-size, small to mid-size apartment buildings that you can convert to short-term, the whole building to short-term rentals, right? That's the play. But going back to your question, Florida and California will forever be ideal places that people want to live.
Yes. Right? Because the weather and yes. Can you tell me like example of a unique stays that you said, because I didn't hear?
Yeah, so an example of a unique stay is, I'm going to again use my vineyard for an example, as an example, right? In my vineyard, we're creating like a geodome, a cottage, a small cottage. We converted a barn into a living space. And we're giving experiences for people to stay by doing the following, right? It's a vineyard, so people get to come. They can see the grapes. We have an orchard. They can see the orchard. We created trails for people to walk on the trails. We created areas for people to ride bikes. It's not, and it's isolated, right? It's not like staying in a 3-bedroom house in Fort Lauderdale. It's a remote area for people to go to escape from the day-to-day living, right? So that's really my unique thing.
It's like something very special that they will remember.
Correct.
Yes. Okay. So that's it. We finished all our questions. And thank you for all the information. It was very nice talking to you.
All right. Thank you for having me. It was fun. I will see you guys on the next one.
Thank you so much. And watch the podcast.